Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today, Thursday, March 31st. It is the end of the quarter. For some reason, I thought the end of the quarter was going to be Monday. No, the end of the quarter is actually today. I mean, I'm just losing days. So we are at the end of the quarter, which could be an interesting day in the markets potentially, as people look to mark their positions for their quarterly reports. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. And really what we're going to be looking at today, the headline came out last night. The headline came out last night, which was the U.S. is going to release 150 million barrels out of the strategic reserves. I think the plan is a million a day. So it is going to put some supply out on the market. On that announcement last night, oil dropped significantly, dropped about 5-6%. And then, which is even more interesting, is this morning, just as we got ready to start, OPEC Plus announced that they agreed to a very, very, very modest increase, but an increase nonetheless in their output. So, you know, not that that's really going to move the needle a little bit, but it's a message. It's a message that they're not going to just keep doing nothing when there is demand for oil under the current geopolitical circumstances. So definitely have that. And then I'm going to let Brian talk about the PCE number that came out today. That was certainly interesting. But markets or equities are all right now sort of on pause. We're waiting to see what the retail trader has to say and how they want to mark things for the quarter. FX all pretty flat, but the big move really has been, and the big talk has all been around oil. Before I flip it over to Brian, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And if you wanted to know what I was just talking about, a quick peek, I shot a message off to Brian. It was 9 o'clock here. It was 10 o'clock out east. But this is exactly when the president said we're going to start releasing 150 million barrels, and oil dropped from 108. It went down below 102. Pretty significant move, 5-6% move to the downside. And since then, it's kind of chopped around a little bit. And we would expect oil to do that. I mean, when it's trading above $100 a barrel, for it to make $2, $3, $4 moves in a day, it's specifically in this environment, to be expected. So, Brian, let me flip it over to you, and you could talk about some of the other economic numbers that came out, and then just as a reminder, tomorrow morning we got another set. So,
Yeah.
it's more numbers. So,
Yeah. The big one today was PCE, as you mentioned, and PCE came in as expected. Is that a big deal? Yes and no. I mean, it's still a positive number. It's still continuing to grow. Remember, we did have one interest rate rise, so that's not necessarily going to be kind of baked into this yet. It does take a little bit of time for that to, be affected. But again, it is still going higher. Last month they had said that. I guess they've been holding it, but they've been trying to go to this 0.4 for a while. They started in December and then had to go up. So it's not quite as much as of what it was, but again, we're still going positive. It's still getting worse as far as inflation is going. So again, the biggest thing here is it wasn't like a point 0.1 or it wasn't a negative number. So it's not something that, the Fed is not going to be able to say, you know what, it only went up 0.4. We told you it was transitory, because it's still just going up. It's just, slowing just slightly, but that doesn't mean it's stopping. I mean, this data, again, as I said, doesn't have the 0.25 in there. Besides that, unemployment came in a little bit higher than expected, but 200 is kind of like the average. Like if you had to draw a line, if you put a moving average on there, 200 is pretty much what the standard is. I wouldn't necessarily be super concerned about that one. Currency market across the board is basically flat right now. The European session didn't do too much with it. The biggest mover is the pound yen at -48, but the yen has really kind of stabilized itself for the most part. Like the dollar yen is down 15, nothing. Euro pound, is there a strong one there? No, it's down -2 in the last 24 hours. So there's not a lot of currency movers right now out there on the market. And really the question is, what's happening? We don't know. Is there pieces or not peace? We haven't heard anything about it. And really, there's nothing in the headlines that really show us anything. They've agreed to, the only thing we've really heard about it is, earlier today, about 2 hours ago, the Kremlin has basically said, hey, Germany, this is how the ruble for payment is going to work. We'll be rolling it out today to you. And Germany, in response, has come up with I found it up here somewhere, has come up with a 3-tier system that basically how, when they have the, actually it was over here talking about it cripple the economy, and I miss it. I can't find it now, but basically talking about how there'd be a 3-stage process where households and hospitals would be able to have it, but industrial production would be cut off, and they said this could be extremely bad for the economy. So again, it's nice that the G7 voted for that, but yeah, I mean, at the end of the day, Germany's preparing to have it cut off. They're like, yeah, they're going to cut it off. It is what it is. So kind of an interesting situation unfolding. And again, as Todd mentioned, that the data last night was that Biden said that they will they will release 1 million barrels. Question is, where's that 1 million barrels going? Is it going to help it in just the United States? Because remember the whole Russian situation, we only took 90,000 barrels. It was like literally like a drop compared to what we take in every day. Is the million just for the United States? Because right now global prices are what's driving oil. It's not so much what the United States can't get. So is the million going to make a huge, huge difference? Maybe, maybe not. OPEC is starting to make a little bit more. This came out about 34 minutes ago. Actually, the OPEC meeting just started, the OPEC Plus meeting, but they recommended, as Todd said, a modest increase. I just had it up here again. I don't know why everything keeps moving around.
Clicking all over the place.
Yeah, instead of 400, because it's all this low impact news, it can't figure out how to rate it. But basically, instead of doing 400, they're doing 423. Oh, here it is, right here. Yeah, the coffee has not kicked in today. OPEC Plus, they recommend a 4.32 increase. So is it a radically different increase? Not really. It's a little bit more, which is great. Was it the planned amount? Probably not. It's probably a little bit higher, just because so many countries are saying it's such a huge problem. Will they get back to it? Maybe, maybe not. I think the bigger story in this one is that Russia they're creating programs now about how people are going to get the rubles and everything, and Germany putting all those things in, I think is a big deal. One of the other headlines too, I think, is important to bring up, and we're starting to hear more of this now. We're also seeing this in regards to China as well, talking about how the ruble has now officially gained 100% of its losses after the invasion. The comments of, the ruble is going to be reduced to nothing because of our sanctions. Supposedly, I didn't realize this, but it only took 3 days for it to go back up again. And if you look at the chart, there was a huge surge in the beginning of the year. But before that, the price of the ruble now is actually more than it was in November of last year. So it hasn't absolutely crippled it. And now they're going to start taking payments and gas in it. So it hasn't, been what we thought. And, another thing, just, again, keeping this, it's not so much of a mover today, but we don't really have the headlines for it. A comment about how, I think it was down here. There was a meeting earlier this morning basically talking about over here. The tariffs have done nothing for China. China has, we came in strong, and now at this point, there's not a lot of pressure on them. It says there's been little to no effect. It's not incentivized China to change, and it's very clear to us, I think, collectively, that we can't keep doing what we're doing. So originally it was, we're going to come really, really strong against China, so they changed their policies. And then when we had the administration change, we kind of backed off a little bit. We kept some of the tariffs in, but now they're like, it's just not going to work, and we can't maintain it. And originally it was that we would just crush China and that they would never be able to deal with our sanctions. And as soon as we backed off, now we're the ones that are starting to say, hey, listen, this is not going to work. We got to change. So not necessarily what you want to hear out of the large, out of the most powerful economy in the world, saying that, yeah, we can't keep it up. Especially the way that they've been allying themselves with Russia. So not necessarily on the best front. So oil, obviously we mentioned that. Yesterday, you guys can see there's a bunch of colors here. If you guys have done the 35-1 strategy, it actually hit a little bit early yesterday. It hit at about 9, I think, when we were looking at my group, 9:52 is when it actually bounced off the zone. There was the 2 levels we had talked about. You guys had known about these 2 levels yesterday. But when we dove into the 5-minute and the 1-minute, the stabilization actually happened a little bit early. But it already started to kind of, even though the down draw was bigger than expected, it had already started that push. And then obviously we had the big push down. And now we've happened to run into buyers at $100 and kind of stabilize ourselves. So what's interesting about this is really the European session started right here, right? That's where the European session started. That's not really that big of a move. Yeah, pushed it down a little bit, and then we had some profit taking come in. again, remember the U.S. session tends to be the more bullish of sessions. Question is, I mean, this is a parabolic move. Are we going
Yeah.
to see a retracement back up again? It's nice to say, hey, listen, gas went down from 107 down to 100, but remember, it did that the other day too when we supposedly had beef with
And it
Russia,
went right back up.
and it went right back up, and that one actually deeper than this. Now we're increasing supply, but where does the supply come from? Is it going to be at the expense of somebody else? And again, he did put a cap of, I guess, 150 million. I didn't see that, but again, it is called the strategic oil reserve for a reason. If you drain your reserves, is that really what it's designed to do? The answer is no. So, yeah, it's an interesting play. I would actually be looking for this more long opportunity today. I know people see the headline, are like, "Oh, we're producing more. It's great." I mean, this almost $10 drop in price. That's going to be, we're going to see our gas prices go down like 2 cents. So just so everybody understands, this is not going to send us 50 cents down a gallon, especially with where it is. And I would not be surprised at all today if we come back down, test, and then actually go a bit higher. So I'd like for it to come down, but you know, a million barrels a day for a limited period of time versus that 400, they're increasing it by 432,000. In reality, that 432,000 will last longer as they continue those increases higher than that the 1 million barrels a day scenario happens. So really, going back to a gas article we saw before, it takes 2 to 3 years to bring a new natural gas plant online. Oil is about the same, and we're already at capacity. So it's one of those things. If we're releasing reserves, it means we can't produce anymore. So it's
So
it's
yeah,
kind of
it, it
crazy.
looks
Yeah,
it looks like the $100 a barrel is where the buyer sort of
yeah, it's going to be
stepping
a
in,
psychological number. Yeah,
and
it's
a
going to be
big
a psychological
psychological.
number. It's big. Yeah, it was. Remember how long the first time we hit it? It was a top forever. So, I would, again, like I said, I would look more towards the bullish aspect of it. The headline is great, but the headline is already factored in. All the traders that trade us in the overnight are not waiting for the retail trader to start hitting that short button. And that's when we have the market go back higher. So, you know, I would just watch it. And again, gold is basically unchanged on that news. Gold is at 0.04, so we're not seeing anything in gold. Important to note, though, tomorrow is the first day of the month. Non-farm payroll is a big deal. I think what's going to be to watch tomorrow is the average earnings rate. They're saying it's going up 0.4, but last time it was supposed to do that up as well, and it did nothing. Again, this is the big problem that we're seeing. As inflation is getting higher and higher and higher, if we're not maintaining with the average earning rate, it means that we're getting paid less and less. Our money that we're getting paid is getting us less. Last time it was a big surprise to the downside. I think they're crossing their fingers and hoping it comes in at 0.4. We'll see if we can make up on that one. And then again, we'll see what the jobs look like. And really, none of these numbers is really kind of earth shattering tomorrow unless they come in absolutely completely, you know, if this one comes in at 200,000, then yeah, it's kind of a big deal. But
Right.
this is all the catalyst they need for excuses to say why they're not raising a 0.5. If these all come in as expected or green at all, there's absolutely, they got nothing. There's literally nothing. Maybe that Russia changed their mind. Okay, that didn't change anything before. Again, I think we're going to start hearing 0.5, 0.5, 0.5, 0.5, and strong
Yeah.
dollar coming back in, especially with the manufacturing number coming in.
And listen, inflation still is climbing at 5.4% now. I mean, they've got to. I mean, it's still going up. It's not gapping higher. Some crazy. I mean, it's still a crazy number. I mean, that's just the whole thing.
It's just grinding higher, and it grinds higher, grinds higher, grinds higher. And again, if you look at kind of what's happening this year, other big events, we know that we're going to have the midterm elections. Biden's approval rating is the lowest it's ever been in his presidency right now. It just broke the 40% mark. The number one concern is the lack of handling inflation.
Yeah.
So, yeah.
Yeah. All right.
So, it's a big deal.
Yeah, well, all right. Well, with that, I mean, because that's really what we had this morning. Any questions for Nadex, email us, customerservice@nadex.com. Brian is also available. If you got questions for Brian, would like to access Brian as a resource, he is available at support@keeptradingsimple.com. If you need anything from Nadex, or you got what we're doing, what you like, what you don't like, what you want to see more of, what you see less of, please email me, todd.rich@nadex.com. A quick recap of what we went over this morning. Really, that the PCE number incrementally higher, but came in line with expectations. And then it was really all about oil today, with the U.S. announcing we're going to dip into those strategic reserves, 150 million barrels, 1 million barrels a day. Oil had an immediate gap lower last night. I mean, it was instantaneous.
And
And
the indices are flat, guys. I didn't cover them, but the indices are
yeah,
flat. We have 2 that are
indices are
green,
flat.
2 that are slightly red. I mean, they're completely
It's nothing.
flatline right now.
Yeah, we got indices are flat. FX
Dollar flat.
flat. I mean, it's just nothing's the one thing that's moving. The hot spot in the market today, as of
Only.
right now, is oil. And this, it's just that's what we had to discuss. Even though it's the end of the quarter, and tomorrow we're going to be getting our unemployment rate and the non-farm payroll numbers. So tomorrow morning, maybe we'll see how the new quarter begins when we get those numbers, and we'll see how people ultimately want to mark their positions. Particularly, some of the institutional folks want to mark their positions today at the end of the quarter. We could see a little bit of volatility going into the close. With that, Brian and I will catch you again tomorrow morning. Thank you so much for joining us. If you like what we're doing, please give us a like over there on Facebook or on YouTube, wherever you happen to be catching us. We do appreciate that. And until we catch you tomorrow morning, good luck in the markets, everyone.